Okay, Vertex Holding itself is owned by Temasek, and it's wholly owned by Temasek. Vertex family of funds, four IT and one healthcare funds. Essentially, these are partnerships whereby Vertex Holding or Temasek is the anchor investor in the fund, and the rest of the funds are separately raised and managed by the GP, who respectively own the GP company. And then they have each of them manage their own investment in their each respective region or sector, but then there's a co-sharing of profit among each other. Well, generally we focus on early stage investment, so that is a common theme that we have gone through, and common theme is about building great companies, so that's a common theme, right? But there are some minor variation in each country depending on the local expertise. For example, Israel is we focus on software, generally all of us, but Israel, for example, they are very good in cybersecurity, they are very good in certain sector. So our Israeli team tends to be a bit more heavy in cybersecurity related focus. Our US team, because they came from more enterprise software sector, and then Jonathan Hilliger and Insik, both of them are very familiar with the sector, so they tend to focus a bit more on B2B and a bit of cybersecurity. And China, of course, China is a big market, and a lot of opportunities. And recently, because of a lot of development in AI, manufacturing, and hardware, so they have been focusing a bit more on that sector, and because of the opportunities. And Southeast Asia is a new market. Of all the markets, it's newest of all. So as a result, Southeast Asia, we tend to still focus a bit more on the B2B and B2C sector, less in the so-called cybersecurity side of the high-tech sector, more in the application sector. Well, venture capital is all about people. A good fund and a bad fund, a lot of times very determined by the people, the GPs and the investment professional. In order to retain a good investment professional, you must make them feel that they are owner. So in order to do that, you must allow them to raise money. So that's why Vertex decided to go with this strategy whereby each of the partnerships are allowed to raise money and then put their own capital into this. And this is a better way to retain talent, and that's the better way to align interests with the global opportunities. We first started off in early 2016 raising this money. I think initially there's a lot of concern about Southeast Asia. They think that Southeast Asia as a market, the region is not there. So there's no proven exit, there's no proven companies going IPO, there's no proven big multi-unicorn, right? So that was the hardest part in our fundraising initially. But as we show more LP our track records and what we have done over the past, and some of people are able to take the bet and leap over and make the bet. And guess what? After we close the fund, now we have two big exit from Southeast Asia. One is Garena IPO in the US, 5 billion US market cap. The other one, Razer, which go IPO in Hong Kong yesterday. I think now 6 billion market cap. So now I think all this question about Southeast Asia had no unicorn, or the question all disappeared. Right? But guess what? We already closed the fund, so there's no more room to let people in. So if I had known that this is going to happen a few years ago, I would have delayed the fundraising much later. But nevertheless, things happen that way. But then it's going to change. Southeast Asia, we still are early stage investors. So with the fund about 210, in fact, we intentionally keep the fund at 200 million. We could have raised 250 or even more, but we intentionally kept it at 200 million US because we believe that that's a big enough fund size for what we're trying to do. We're still going to focus on early stage investment. First check of $2-3 million US. As the company make good progress, we put more money in to support them. So overall portfolio, maybe 25 to 30 companies on average, deal size of maybe $8 million US. That will be still the correct approach. But initially, still focusing on early stage opportunities, and investing over time. So there's no change in that. Clearly, initially, when the Southeast Asia, all the company was small, so that's not an issue. So you all exit around $50 million US. But now everybody's trying to go for the sky, right? So I will go for the moon, I guess. So now, if in that case, you need more money to execute, and you need to raise more money in B and C and D. So therefore, this so-called crunch topics are coming more often because now people are trying to raise more money to execute a bigger business plan. So now you will see a lot more people trying to raise more money. So therefore, some people may not be able to do it, but some people will be. So, but I think we are hearing a lot more people are trying to raise bigger fund, 500, 600 million US to address that gap. So this I think will all be solved over time. Today there's a bit of that problem, but I think over time it will be solved. Yeah.